Canadian VCs are just more risk averse. And so they really are going to write checks into companies that you have a couple $100,000 in revenue. It doesn't mean you can't get that, but it just means typically the companies and the founders that get those checks are established. So it means like you worked at Shopify for 10 years as a PM and you've developed this super hyper niche. And so then you're going to start this company that has it. At that point though, you kind of like, it's just the reason I say they're very risk adverse is because it's very rare for you to hear about stories in Canada of like 18-year-olds raising a couple $1 million to go tackle this really big problem. Happens all the time in the States. The main thing that I sort of break it down to is people are richer there and they have a higher risk tolerance. Like when Canadians get rich, what do? They buy a house. Then they buy a second apartment and they rent it out. Then what do? They buy a cottage. That's it. And then they buy like mutual funds or something like, that's it. That's all they do. It's like people are risk adverse here. They would much rather not lose what they have than to 100x and to be something better. And the problem is they're kind of right in that you probably will lose it if you do risky things, but then you never have anyone who's worth $100 billion. It just doesn't happen in Canada.